Okay, good afternoon, everybody. It is Tuesday, July 19th, 2022. And today we are going to be talking about some bank earnings on Wall Street. Obviously, yesterday there was no stream, but we did have many of the big financial firms, investment banks on Wall Street reporting earnings. So we're going to be talking about Goldman Sachs earnings report. They did report earnings yesterday, Monday, after the bell. Goldman Sachs investment bankers took in about $2.1 billion in fees. That's about 41% less than a year ago this same quarter. Now we're going to talk about why that is. We briefly talked about why we have forecasted that many of the investment banks should post worse than expected earnings, mainly because of the investment banking and equity underwriting and the deal flow being a lot less than in 2020 and 2021, obviously when we had all of the COVID stimulus. So I actually think, after looking at all these earnings reports from the main investment banks, or, you could just say the financials in general, I mean, even though profits were down about 50% across the board, and many of them actually even did worse than analysts were expecting, it actually wasn't too bad. And we'll talk about why. But I think the number one reason why is because we have to take into consideration the comps or the comparables, right? So whenever a company reports financial earnings, it is being compared to the same quarter last year. And in the same quarter last year, we were talking about this specifically exclusive to Goldman Sachs. Even the CEO of Goldman Sachs came out and said, look, this was an absolute fantastic report that we... Hold on, just let me adjust my microphone here. The CEO of Goldman Sachs even said himself that they produced a phenomenal earnings report, but to expect that this will not continue, obviously, because Goldman Sachs makes the majority of their money from management fees and fee income, right? So let's say if Goldman Sachs is doing advisory work on a big M&A deal, if they have a client that wants to purchase a company, or if they have a client that wants to sell their company, they will then pay Goldman Sachs a bunch of fees to do that, right? Same thing as if a company wants to go public. Goldman Sachs will, make out like a bandit in all the advisory fees, the equity underwriting fees, and so on. So if we take into consideration that IPO activity or initial public offering activity is down about 97% year over year, well, we could probably expect that corporate earnings at Goldman Sachs, JP Morgan Chase, and Bank of America are going to decline severely. Now, that's not the entire story. There is some bright spots in the earnings report, which we will talk about. And I think one of the biggest bright spots in Goldman Sachs' earnings report was the trading activity, or the trading revenues and the profitability in their sales and trading department. So a lot of times when we talk about the investment bank, right, I think many people don't really understand, or maybe some of them do, but I think it's a good time for us to review it. A lot of people don't understand the hierarchy structure or the business structure at an investment bank, right? Many people think if you work in investment banking, you're just doing financial analysis on deals, helping companies go public, helping with mergers and acquisitions, but there's also other departments within the investment bank, such as sales and trading, right? And you could also have proprietary traders there. So if we think about the reasons why trading volumes are up across the board at major investment banks, well, that's because market volatility is up, right? And if short-term traders, or if you want to talk about like swing trading, intermediate-term trend trading, or even managing money or trading money on behalf of clients, you need volatility to make money, right? Especially if you're running some sort of a quant strategy or something like that. Increased volatility is actually very, very good for traders, and we've been living in an environment where the VIX, or the CBOE volatility index, has been relatively elevated and extended. So this is actually a good thing for many of the investment banks that run proprietary or prop trading desks or manage money for clients. So we'll talk about that today. We'll also talk about oil. Oil is very important to pay attention to. But first, let's see who we have in the chat tonight, everybody. We see Sally is here. It says, hey, Tom. Vinny Castellano is here. It says, good day and good evening, Tom. Good to see you, Vinny and Maria. Pearl Heart Disciple says, good to see you. Good to see you, Pearl Disciple. We have Fred X is here. This is sweet. Buy the book, the one and only. Says, hey, Tom. Grant says, g'day, Tom from New Zealand. Welcome. Good to see you, Grant. Otto is here. Says, hey, Tom. Good to see you, Otto. Corey says, good evening. Good evening to you. Corey, be blessed, says, blessings. Thank you so much. Daryl says, hey, Tom. Good evening from Chicago, Illinois. And it's 90 degrees here today. Yeah, it's been absolutely wild here today. Extremely crazy in terms of temperatures, not only here in the United States, but in Europe as well. I think Europe is battling their worst heat crisis ever in history. So please stay safe and please stay cool wherever you are watching this stream from. Sherry Rodrigo is here. Says, hey, everybody. Good to see you, Sherry Rodrigo. Sherry Rodrigo. Grant says, overhead rail, cool. Yeah, so this is called the Metro Mover here in downtown Miami. And the Metro Mover is free, so you do not have to pay for this public transportation, which is really nice. But we're starting off this stream outside of the Southeast Financial Center, which I think is 200 Biscayne Boulevard, if I'm not mistaken. Now, I was in the office today, and I was actually walking around the office. As many of you know, I tend to work out of the WeWork locations here at this building. And I've noticed something really interesting. Okay, I noticed something really interesting. So as we've been talking about the potential move, well, I shouldn't say potential. The deal is already done, it's locked. Citadel Securities will be moving to Miami. I think Citadel Securities has a temporary office in my building that I work out of here at the 200 Southeast Financial Center. So it was kind of cool to see them putting up all of the Citadel Securities, the Citadel logos. So hopefully I'll be seeing some of those guys around the office because until their regular office is built, it looks like they are going to be, I think, all but temporarily working out of this office. So more to come on that. I see Hemp Lord says, what's up, Tom? What a day. Good to see you, Hemp Lord. Hopefully you are well in your neck of the woods. Bernard Friedman, good to see you. Welcome. Good to see you, Bernard. Western Mass Dave says, wishing well to our friends in the UK. Yeah, absolutely. Yeah, Dave, it's absolutely insane, the temperatures that are being recorded in the UK, parts of Europe. So hopefully everybody is staying safe. This also comes at a time where we are in an energy crisis. I would say we are in a full-blown energy crisis, not only here in the United States, but across the globe as well, more specifically in Europe, where much of the energy dependence unfortunately now lies in the hands of Russia, right? But we won't get too political as to why on the stream. But I think Germany is in some real trouble here. I think Germany is in some real trouble. There's a very good possibility, or a very large possibility, for rolling blackouts or power or energy shortages. So we'll keep an eye on that, and it couldn't happen at a worse time if you think about it, because we are seeing extremes in the weather pattern. So we are seeing in the winters, it is brutally cold for the winter, and in the summer, which is now, we're seeing unbelievable record temperatures sweep across Europe. So please stay safe there. Bernard Friedman says, Tom, there is a heat advisory in New York right now. Wow, I think we were under a heat advisory too right here in Miami not too long ago. Line Sink says, UK calling. Yep, it reached 40 degrees Celsius in various UK locations. Tuesday, an all-time high since records began in Victorian times. Wow, that is insanity. So please stay safe, everybody. I've been hearing reports about the power grid and energy companies are actually reaching out to customers requesting to turn down the AC, or turn up the AC, I should say. Fire Lily says, damn, the picture is clear AF. Good to see you, Fire Lily. Hopefully you had a good day. Kirby says, why did the market go up today? Well, I don't really think that anybody knows why the market goes up on a day-to-day basis, but I think it's just because the market's been going down. I mean, have been in a severe bear trend, and maybe the market is looking forward and looking through a lot of this bad news. Now, valuations have come down quite a bit. We've seen many of the big financial companies on Wall Street, most notably the investment banks, report earnings, right? And usually the investment banks or the large financial institutions on Wall Street can be used in a way as like a forward-looking indicator for the economy. And one of the reasons for that is because, let's say if you are a Goldman Sachs or something like that, well, your clients tend to be other large Fortune 500 companies, other large businesses, multinationals in different sectors of the economy. And when Goldman Sachs or other investment banks talk to their clients, they often advise them on how to best run their business and run their operations. So at a Goldman Sachs earnings report, we actually got a little bit of clarity about what the vast majority of Goldman's clients are worried about. And many of them are still worried about inflation, right? Many of them are still worried about inflation, but the CEO of Goldman Sachs did note that many of their existing customers are quite optimistic about the improvement or the healing of supply chains. Now, I think it's very important to note that, because every time we talk about inflation, well, why do we talk about supply chain when we talk about inflation? Is because I think in order to be fair, right? I think in order to be fair, it is important to realize and acknowledge. Check out this airplane going by. I think it's important to realize and acknowledge that a big part of this inflationary problem has been just an unbelievable mess in supply chains, starting with the COVID pandemic. Now, I think a lot of the reasons why the supply chains are messed up is due to the zero COVID policy in China. You know, it's very hard to manufacture products when you have very decentralized supply chains, more notably in the semiconductor space, and that's why we are seeing some major companies, some larger companies, most notably Apple, is actually taking very key segments of their supply chain and bringing it back stateside domestically. Now, we're not only seeing that with Apple, we're seeing that with many semiconductor or chip fabricators or chip fabs, which I think is very telling, right? I think COVID was a big wake-up call for many big companies to say, look, you know, having a decentralized supply chain is good in a way, but also in others it is not good, because you're dealing in many different regulatory environments, you're dealing with many different governments. And if one government says, okay, business is on, you can go to work and you could produce goods and services, that's all well and good. But if one government says, nope, everybody has to stay home, you have to shut down the factories, well, that can have huge ripple effects. So I think one of the most notable, I think on a positive note in a lot of these earnings reports, most notably Goldman Sachs, is that obviously one of the biggest fears of Goldman Sachs clients is still inflation, but we are seeing improvement in supply chain, which is good. Jamie Massetti is here, says good to see you, Jamie. Sabrina Fair is here, welcome. I see British Gray joining us from Tampa, Florida. Good to see you, British Gray. We are now looking over the Aston Martin building right here in downtown Miami, which is beautiful. I see Roy S. Good to see you, Roy S. I see Michelle K. says hello, Tom, and everybody. Good to see you, Michelle K. Kathy Lyons says hi. Tom, happy Tuesday. How was your day? Good evening, everybody. My day was pretty good. Tomorrow is actually going to be an even busier day than today. I actually have, I guess we'll walk this way. We haven't walked this way in a while. I have a pretty big meeting with a very large retailer to discuss their wireless failover or fixed wireless business. So that should be interesting there. Dr. Longus is here, says hey Tom. Good to see you, Dr. Longus. Roberto says hey Tom. Gigi NYC says evening Tom and chat. Good to see you, Gigi. Hope you're doing well. in New York City. Now, I was hearing from a lot of my friends, a lot of my colleagues or previous coworkers from New York. Supposedly you guys had a massive rainstorm slash, I guess, like mini flash flood there. So there was many parts of the subways that were just taking on so much water. I saw incredible footage of MTA buses that were filling up with water. So just really incredible flooding that was happening in parts of New York City and New Jersey, which was very reminiscent of what happened in 2021 when we had the same problem. And it unfortunately led to the death of, I think, about 30 people that unfortunately drowned in their apartments and the like. So hopefully everybody that is in New York City left unscathed from that crazy flooding event that we had yesterday. So I know GGNYC is there, photos from around New York, so hopefully you guys made it out okay. Yes, Sabrina Fair's like, I thought I might head to Miami, but it's too warm. Yeah, I mean, I think with the factoring in the humidity, it was probably right around 100 degrees, maybe a little less. You know, although I don't think that Miami has ever hit 100 degrees or triple digits in the history of Miami, which is a little weird. You would never think of it that way, but it is true. Miami has never hit triple digits. Now we are here at the Epic Hotel. Lena Sandoval is here. Says hello, Tom. Good to see you, Lena. Welcome. GGNYC says it was apocalyptic rain in New York City, especially here on the Upper West Side. Oh my God. Hopefully all of that flooding has now receded. Bernard Friedman says risk of a hurricane in New York is moderate and in Miami is high according to what I experienced. Carson says could use the rain here in Kansas or Arkansas. Highs in the hundreds all week. The whole state is under burn ban. Wow. Yeah, I guess burn ban means what? You're not allowed to have any fires because you could spark some sort of crazy forest fire or something like that. Yeah, I mean, I feel like the weather patterns have been getting more and more extreme as the years go on. It's been nuts. Sherry Rodrigo says, I am shocked Miami has never hit triple digits. Yeah, it's true. Miami has never hit triple digits. Dr. Longus is there usually a nice sea breeze in Miami? Most of the time there is. I'd say most of the time there is, especially if you're in, let's say, like South Beach or, you know, Brickell area, which actually we are headed to in short order. So it actually doesn't feel too bad. But I guess if you're in places like Hialeah or something and it's, you know, 97 degrees and 90% humidity, it's probably not going to feel too good because Hialeah is pretty much inland, middle of Florida. E-Baby is here. Good to see you. Says good evening. Yeah, Carson says, yep, that's right. No fires. Yeah, Carson, it was interesting. We were talking about in relation to insurance companies in California specifically with all of these increased risk of wildfires and forest fires. So a lot of, you know, and not to just pick on California, you know, it's actually happening here in Florida too, in relation to the hurricanes and flood risk and things like that. A lot of these insurance companies are actually choosing to not renew policies on a lot of the homeowners insurance policies, right? So let's say if you live in a particular area or neighborhood in California where the wildfire, the fire risk is extreme, they're actually choosing not to renew the insurance policies on those specific houses because due to California state law, insurance companies are not allowed to raise premium, which is the amount you pay in an event something bad happens. They're not allowed to take into consideration future risk or future risk modeling when, you know, increasing or decreasing insurance premium, which I think is pretty crazy because we are all well aware of, you know, the risks of climate change and things like that. So when insurance companies hire scientists to sort of project and model in a particular neighborhood, if they will be at more significant risk of wildfires. Obviously, if those models show that your house in the next 10 years is going to be at more risk of a fire, well, you're probably going to see insurance premiums go up. But in the state of California, you're not allowed to increase premium based upon future projections. So a lot of insurance companies are just choosing to pull the plug altogether. And you're starting to see the same thing here in Southern Florida in relation to flood risk and hurricane risk, right? So a lot of houses, we talk about like Normandy Shores, Normandy Isles, a lot of oceanfront property in Southern Florida, and not exclusively to Southern Florida. Many other places, coastal cities in the United States, are unfortunately experiencing the same thing. Either insurance premiums are going through the roof, or these insurance companies just pulling the policy altogether. So, kind of crazy. Wow, check this out. Kirby says, any good spots, dating spots in Miami you recommend? I mean, pretty much anywhere around the city. I mean, it's a gorgeous, gorgeous city. But I'd say Brickell is probably the most up-and-coming area, which we'll probably take a walk around tonight. Exploration says, tomorrow is Tesla's earnings report. It is. So tomorrow we will have, obviously, hear from Tesla, which I think is really going to make the market, right? If we think about by market capitalization, within the S&P 500, the top 10 stocks make up almost 20% of the indices. So, as we hear reports from Apple, Tesla, Microsoft, Alphabet, Meta, formerly called Facebook, those are really the stocks that are going to move the market, be make or break. So I think it's going to be very, very important to pay attention. Obviously, if they miss earnings and they even give worse forward outlook, what is this person doing on this boat? If a lot of companies miss analyst expectations and then guide lower, what is that going to mean for, forward PE ratios on the S&P, right? It's probably going to re-rate even more, in which case we'll probably have lower prices. But, from the investment bank earnings that we just saw, even though revenues were down and profitability was down about 50%, we have to really put it into perspective and say, okay, the quarter wasn't that bad based upon the fact of screaming inflation, a 97% reduction in deal flow in the IPO market. So based upon those factors, a lot of the reports I saw from Goldman Sachs, JP Morgan Chase, Morgan Stanley, actually not too bad. Goldman Sachs actually beat earnings expectations, but many of the investment banks or many of the financial companies actually missed analyst expectations. So speaking of Bank of America, we are overlooking the Bank of America tower right here. Hey, Jonathan C. says, is Brickell across the river, Tom? Yeah, so Brickell is across the river. So I guess technically this is considered downtown Miami. We are overlooking the W Hotel and Residences. Beautiful, beautiful hotel, but you could also purchase these as condominiums or apartments, I believe. I see out and about our moderator from Toronto, Canada. Good to see you. Line Sync says hello. Carol Williams is here. Good to see you, Carol. Lena Sandoval. Hope you are well. So if we want to deep dive into the specifics, if we think about the net revenue, or if we want to think about the fee income, right? Every time we talk about investment banks or financial companies in general, we always talk about that fee income. So Goldman Sachs investment bankers took in about $2.14 billion in fees. This is about 41% lower than the same quarter last year. Now these are Q2 earnings, right? So quarter two earnings. So Goldman Sachs took in about $2.14 billion in fees. That's about a 41% decrease year over year. Now, if you're not following what's been going on for the past 2 years, this might come as a shock. But to me and everybody watching the stream, this isn't a shock at all, because obviously we understand the business model of Goldman Sachs, where they make money when they take companies public. They make money when they help their clients buy companies when they help their clients sell companies. So the more deal flow or the more transaction activity that occurs, the more fee income the investment bank takes in. Now, if we understand that ever since we went into a bear market, the Federal Reserve started to raise interest rates, that has increased the cost of capital, right? That sort of puts some sort of a taste in the mouth of the average CEO to say, okay, maybe it's not a good time to sell the business. Maybe this isn't a good time to acquire another company. Maybe this isn't the best time to go public, right? During times of a bear market. Now, there's an old saying on Wall Street that if you can find or pay attention to those companies that actually go public during bear markets, those tend to be the ones that are actually worth paying attention to, in relation or in stark contrast to the companies that actually go public during raging bull markets. Because anytime liquidity is flowing, anytime interest rates are artificially suppressed, anytime the stock market is raging, it is very easy to sell an IPO to investors. Right? It's very easy to raise money when times are good. There's an old saying, it's everything is all funny while you're making money. But it's very difficult to raise money. It's very difficult to go public when the S&P, when the NASDAQ is down about 30%. So the theory is, if you can find and identify companies that are going public when the markets are tanking and liquidity is drying up, well, that's probably a very, very, very good business. Because for an investor to make an investment, or an institution, or a high net worth individual, accredited investor, to actually participate in a new issue or buy shares in, an IPO, pre-IPO, you probably can bet your bottom dollar that those fundamentals of that business is going to be stellar or rock solid. So be on the lookout for that. So even though that net fee income was down about 41%, it was to be expected, because obviously we are comparing this to year over year. And last year was an absolute heyday for the investment banks. King says, when will you broadcast from New York City again? That is to be determined. I do not know the exact date, but we will, I would say probably within the next month. As Murray 6 is new to the stream within the last couple weeks. Really enjoy it. Great job, Tom. Hey, As Murray 6, thank you so much for joining. Hopefully you are enjoying the sights and sounds of Miami tonight. Now, the humidity finally broke, so it's actually not too bad walking around here. But for those of you who are new, we do these live streams from New York City and Miami, depending on where I am at the time. I tend to travel a lot for business, but hopefully you guys are enjoying the views. I see Fox Tech 106 says, hey Tom, good to see you, Fox Tech. Lace is hotter in more places in the world than in Miami. Yeah, Lace, you're right. It's really, I don't really think I should use the term it's funny, because it's actually not. It's horrible, but it's interesting that Europe is facing not only an energy crisis, but it just so happens they're facing the big energy crisis during a time when this is the biggest heat wave on record. I think tens of people have died already from the heat wave, which is absolutely horrible, and it could not have come at a worse time, right? So if we think about Germany specifically, unfortunately, their dependence in terms of energy dependence is pretty much 100% on Russia, without saying it. But pretty much is, and I think that is due to their irresponsible way of transitioning to green energy. Now, I think everybody across the aisle, both Democrats and Republicans, or sort of whatever you want to call yourself, an independent, I don't really care. I think everybody understands and appreciates that we need to start transitioning to renewable energies. Right? I think everybody can agree on that, but where I think we disagree, or I disagree with many people on the left, is that we need to do it in a sustainable way where it's not going to open ourselves up to risk here domestically in the United States, or if you're talking about Germany, to the Germans. In addition, I think climate change needs to be a global effort. Can't just be the West, can't just be the United States. If you look at places, not to pick on one, but we'll pick on them, in China, there are more coal-generated power plants being opened in China, present day, than ever before. So that allows China access to cheap energy, bountiful energy, at a time when everybody else is trying to do the right thing, transfer to renewables. But then again, that also puts us at a risk because China is essentially ignoring the calls for transition to renewables. They're doing really whatever they want. They're not cooperating. So it puts the rest of the world at a disadvantage when China's pumping oil like crazy, when Russia's pumping oil like crazy, and China is building coal-powered power plants. But not to get too political, I think it's just important to talk about because as we move into the summer months, where we see incredible heat, if we understand that the weather patterns in the summer are getting more egregiously hot like we're seeing in Europe, and then in the winter things are getting more cold, I would say the extremes are exacerbating here. Well, that means people are going to be consuming more energy, right? You're going to need to run the AC more often. You're going to need to, run the heat more often in the winter, and that's not only going to make it a crazy screaming electric bill for you, but we could actually start having rolling blackouts because it's putting so much stress on the energy grid because we are shutting down our clean nuclear power plants, we are shutting down our natural gas burning and coal plants, and relying too much on wind and solar. Now, if you guys have been watching the stream for a long time, you guys know that I am an extreme raging bull when it comes to wind and solar. I think they're phenomenal, but if you remember back to the Behind the Street newsletter, I actually wrote a piece about the missing point. I called it the missing piece to the puzzle in terms of renewables. And here's what I think it is. Okay, here's what I think is that missing piece to the puzzle. So obviously wind turbines can't run 24/7, 365 because that assumes that it's going to be windy all the time. Now that's actually not the problem, in my view. And I think I'd like to discuss it with everybody here openly on the streams because you guys probably actually know, many of you know more about this than I do. And I'd actually love to hear your input. But the problem is energy storage, right? So as of right now, we do not have the battery technology to store all of the energy that the windmills and the solar panels produce when it is windy out, when it is sunny out. That will happen, I think, within the next 10 to 15 years without a doubt, but as of right now, we do not have the capacity to store all of that energy that is produced by these wind farms in relation to battery storage. We just don't have that technology yet. When we do, everything will be fine, because let's say if it's windy for 2 months out of the year, we could store all of that energy, it won't go to waste, and then we could use that stored energy during times when the grid is really stressed. But unfortunately right now we do not have that technology. We will get it. So what I propose is that we continue to rely on our non-renewable resources until we can get up and running 100% and make that clean transition. But again, that's just my view on it. I'd love to know what you guys think. Wendy England says, Tom, I agree, we need a better battery solution. Austin City Limits says there's a lot of wind energy in NM. Robert says hydroelectric generates gobs of power. Yeah, so Robert, I think there's a lot of underutilized or unused hydropower in places like upstate New York, also parts of Canada. So I think that's a really good observation there too. I think that's a really good observation. James says Tesla built huge batteries in Australia. Islander says wind energy takes oil. Yeah, it's a good point. Sabrina says nuclear. Yeah, nuclear energy, I think, generation 3 nuclear power, I think is probably going to be the best, right? Very seldom do you hear about, nuclear reactors melting down anymore, right? But I think that just put a bad taste in people's mouths. But look, at the end of the day, I'm very optimistic for the future. I'm very optimistic for the future in relation to the way we produce energy, not only right here in the United States, but for the world. Very optimistic on the new technologies. All right, everybody, we are now looking over the beautiful Brickell. So if you look at the building that says WeWorks right here at the bottom right-hand corner of your screen, that's actually in the KPMG building. So sometimes I work out of that office too, out of that WeWork, but the only thing is it's really, really crowded. So for anybody who's not familiar with Miami, this tends to be the new up-and-coming and exciting area where everybody wants to be, which is directly across the river here. So there's many other WeWork locations and many other office buildings that are, number one, a lot less expensive, just right across the river here. If you look at the Wells Fargo building, directly behind that is the 200 Southeast Financial Center, which I think Citadel Securities has a satellite office. I was actually watching them put up some Citadel Securities stuff in my office today, and I was like, wow, that's a coincidence, because I think that's probably going to be their temporary office until they actually build their brand new building a little bit over here, which me and Action Kid were walking past the other night on the stream, if you guys remember. Exploration says no new nuclear plants built in over 30 years. Yeah, I think it's a travesty. Dr. Longus says, Tom, honestly, wind is and will always be non-effective or efficient. The cost is greater than the return. I think in many cases you're right. I think in many cases the cost is greater than the return. I think the number one variable that we need is the storage piece. I think if we could solve the storage piece of the problem, we will be on the right track. But that is a good observation there. Hey, Lila is here. Good evening. Welcome. Good to see you, Lila. Says, I think we would be closer to being able to have the technology, but the lobbyists and their dirty work at the government level for the greed of oil companies. Okay, so you're thinking there's maybe some corruption at the government level, that big oil companies are paying off government officials? Is that sort of what your thesis is? I mean, I'm not going to say you're wrong. I don't think I necessarily disagree with you. I think it's very possible, but I think at the end of the day, specifically with, I would say the past 2 or 3 administrations has not really been on the oil company's side, but maybe that could be delaying things. I think that I think it is possible to have. So here's what I'll say, and I want to know what you guys think about this. Right, because at the end of the day, these oil companies, these energy companies are a business, okay? And we have to think about them as a traditional business. And that may be obvious, but here's what I mean by that. Here's what I mean by that. If you have all of these new rules and regulations coming down the pike by administrations, how are you going to be able to plan to build new facilities, invest in research and development, invest in refinery factories and things like that, if you're getting word from the government that they are going to ban and sort of outlaw your business altogether, right? So at the end of the day, when we run into these energy crises and energy situations, it's hard to then turn back to the oil companies and say, well, why don't you have the capacity? Why weren't you investing in your infrastructure when you were raking in these billions and billions of dollars, right? But then on the other hand, if we think about it from their perspective, they're like, well, the regulations have gone through the roof. You're telling us we can't drill on federal lands. And you're saying that we want to have a plan for the United States to transition from non-renewable energies to renewable energies within this generation. So why would we invest into building new facilities if we know that they're just going to be shut down and we're not going to be able to operate them? Now, again, I'm just playing devil's advocate just to have the conversation. I'm not saying that's definitely my point of view, but that is their point of view, or at least the point of view that they're talking about. So interesting. It's a very fluid and interesting situation for sure. Hey, Cindy Foley is here. Good afternoon, good evening, Cindy Foley. So we're now walking over the bridge to Brickell. If you look at the top left-hand corner of your screen, you'll actually be able to see the City National Bank building all lit up. Wendy England says, why with 300 days of sunshine a year, are there not more solar energy in Arizona? Look it up, it is a crime, says Wendy England. Line Sink says, was it good or bad for the wind turbine industry in the United States to have a transient inhabitant in the White House who constantly attempted to mock windmills? Yeah, so maybe some political mishap there. Ryan Royal says, I love this view over the bridge. I do too. It's quite windy, so hopefully there's no wind noise in the mic, but it is quite windy here. Lilith, the same goes with the solar. People were not getting support from the government, so government on both sides is to blame. Yeah, well, I think there's obviously been a lot of government subsidy. Just look at, a lot of people. So here's where it gets really interesting, and I think Lila brings up a good point. And here's the reason why I think it's a good point, because a lot of the times people on the left, and I'm not saying this to criticize the left, I'm saying it to make a point in relation to Elon Musk being an evil billionaire, and people arguing that Elon Musk didn't really earn his money because his company Tesla got so much money in government subsidy and carbon credits and things like that to help him run his business. So essentially people are saying the only reason why Tesla is successful is because of all the government quote-unquote handouts and things like that. Well, I think on one hand of that argument, I think it's the government's job, if we're forward-looking, which I think the United States is a very forward-looking country, and this is not going to sound so free market capitalistic to me, but I think it's important if the government is going to spend money on something. We waste so much money on nonsense. I think it's good that the government provide incentivization structures or subsidies to businesses that are trying to make a fundamental difference to solve the world's biggest problems. So from that aspect, I think I actually tend to lean a little bit more towards the liberal side of things to say, hey, if there's a business out here where they have a clear mission statement or a clear plan to solve literally one of the world's biggest problems, I think it is justified to provide, incentivization structures or subsidies in the form of, carbon offset rules and things like that. So that's sort of been the argument on the left to say, hey, Elon Musk is this big billionaire, richest guy in the world. He's done it off the back of taxpayer dollars. But at the end of the day, that's what America is always invested in and provided incentives for entrepreneurs that are working to solve big relevant problems. So it's an interesting discussion to have for sure. Hey, Cynthia Beale is here. What's up? Cynthia Beale says, good evening, Tom. I saw a Bloomberg magazine yesterday. It was labeled the crypto issue and another the China issue. I wonder if they are worth reading. Yeah, I'll have to check them out. Probably, oh wow, guys, check this out. Check out this view of Miami Tower here, the City National Bank building. Looking beautiful here. James says, I knew the plot of the Starship Troopers before they made it into the movie. Traveling D is here. Says, hello, Tom. Good to see you, Traveling D. Hopefully you're well. Ren 1018. Hey, long time no see. Hopefully you're doing good. Wendy England says, Elon was in total party mode over the weekend. Did not look worried to me. Roberts says, if your industry needs that much government help, perhaps it's not a good industry. Robert, that's a good point. So Robert, that is the exact argument that a pure free market capitalist would say. And usually I tend to lean on that type of argument, right? That the free market, tends to decide the best. But I think in Tesla's case, if we think about all car manufacturers, I think there's only two. Well, I think Tesla's the only car company that hasn't gone out of business. Or was there one other one? I could be wrong. I think there was one other one that went under. Could anybody look that up? Fact check us in real time. Hey, Nicole B. Winning is here. Says, hey, everybody. Good to see you, Nicole. Hopefully you're well. Now, I think this vacant lot is going to be another massive luxury high-rise here. And we've been talking about on the stream, I think 3 streams ago, the topic for discussion was that the average rent on the island of Manhattan is $5,000 a month. Now, we talked about how that's crazy, but we also talked about how that's a little bit misleading, right? Especially in a place like Manhattan, if you take the average of anything, you're going to get a huge statistical skew for obvious reasons, right? So if we think about, Billionaires Row in Manhattan on 57th Street, where some of the rents are, $80,000 a month, and you compare that to places in East Harlem or Harlem in general, Hamilton Heights, you're probably going to get a really big skew there, right? If you average, $1,800 a month apartments in with $80,000 a month apartments, you're probably going to get a huge variance there. So I think in general that is why the numbers in Manhattan came out so high, to about $5,000 a month. But if you look at other places, and this is why I think if you go take the median, I think median is a little bit more reliable in terms of looking at, data at face value. And I'm not trying to say that, justify it and say, oh, New York is affordable. It's definitely not. I agree with everybody that there's definitely a housing crisis in general, affordability crisis, but it's not exclusive to New York. We are seeing the same thing here in Miami. I was looking up rents for single-family homes in my neighborhood, and some of these single-family homes, they are 3 bedrooms, 2 bathrooms, and they are renting for upwards of $4,000 a month. So think about that for a second. You can rent a single-family home here, some of them in the neighborhood in which I reside. Some of them are going $3,500 a month, $4,000 a month, just for a 3-bedroom, 2-bathroom house. That is crazy. That is wild. And they are not really a lot of new construction of single-family homes here in Southern Florida either. If we look at housing starts, we're actually going to get some housing data later this week. But the last housing start data we got, housing starts were down about 14% year over year. So I think this is coming at the worst time because we are already at historically low levels of inventory, and now home builders are not even wanting to build. So I think the problem's only going to get worse. Michelle Henry is here. Says, that's a lot. Good to see you, Michelle. Wendy England says, rental crisis in Vancouver and surrounding areas for sure. Yeah, Canada is really crazy. Canada is really crazy. Ren 1018 says, Tom, how can rents in New York City keep going up? 5K average, next 6K. In my experience, a recession always does a reset. So I think you're right. I think a recession always does do a reset. But I think it's very important, Ren 1018, to take into consideration sort of what we explained about rents in Manhattan, right? So people that are not really familiar with New York City, you obviously have multiple boroughs. So you have Brooklyn, Queens, Bronx, you have Staten Island, which tend to be a little bit more affordable. I'm not going to say cheap in any way, right? I'm not trying to make the justification that New York is affordable. All I'm saying is that a lot of times these big news corporations like New York Post, they'll run a crazy headline article to get people, riled up and talking about it, just like we're talking about it now. So they'll say something like the average rent on the island of Manhattan is $5,000. But for a lot of people who are familiar with, data science and how to analyze data, taking the average is not always going to show you the biggest picture, because Manhattan's a big place. You could be taking rents for a one-bedroom apartment in Soho. That's going to be a lot different than a one-bedroom apartment in Hamilton Heights, Washington Heights, or East Harlem, right? So especially if you're talking about like 57th Street Billionaires Row, where some one-bedroom apartments go for like $20,000. I think that sort of gives you a skew. So to anybody that's not familiar with New York City, they'll just read the article and say, oh my gosh, everybody in New York is paying $5,000 a month for rent, which I don't think that's necessarily fair to say. There are many people that are paying that, but there's also many people that are not paying that are paying a lot less than that. But I still think it's a crisis nonetheless. Even if you're paying $3,000, $2,300 a month for a studio apartment, that's insanity, right? You could buy a house, 3-bedroom, 2-bathroom house, and your mortgage payment will probably be well under $2,000. And some people are paying that for a studio, which is wild. Kirby says, where do these retail workers / teachers and firefighters live? So the majority of them tend to live in the boroughs of Manhattan, right, or the boroughs in New York City, like Brooklyn, Bronx, Queens, and also the surrounding counties. Okay, so you could have Nassau, Suffolk County, upstate New York, and many of them commute. So you can find, I guess, a little bit of affordable rent, but prices are still ridiculous nonetheless. Hey, War Walker, good to see you. Yeah, Bob's is New Jersey also. A lot of people go to New Jersey for a lot less rent. If you live in parts of New Jersey, you're probably going to get a better view of Manhattan than you would if you actually lived in Manhattan. So, hey, Hemp Lord is here. This is on the outskirts. Cynthia Beal says many firefighters and police officers live on Staten Island. That is true. Gregory is here. Good to see you, Gregory. Hope you're well. Photos from around New York says, and even if the costs were $5,000 a month, many people are living with a partner / roommate to cover the cost. Yes, spot on. So Photos from around New York makes a fantastic point. I would say the vast majority of people, especially if you're graduating college, you're moving to New York City for the first time, you're probably going to have a roommate, right? And I know many people that have a one-bedroom apartment and they live with a roommate in that one-bedroom apartment. Now, many people may think that's crazy, but the way they structure it is they make the living room a room and buy like a little wall divider, and then one person lives in the one bedroom, right? So it's technically, if you're paying $4,000 a month for a one-bedroom apartment, you have one roommate, well, now everybody's paying $2,000, which is a little bit more affordable, still crazy, but at the end of the day, a little bit more affordable. Yeah, Rentens is getting a room in Manhattan is a nightmare. Been there, done that. But yeah, everybody, Tesla will be reporting earnings tomorrow. So when we stream tomorrow live at 8:30 Eastern Standard Time, we will be doing a deep dive. So tomorrow will be a deep dive exclusive to Tesla's earnings. So it's going to be interesting to see their gross profit margins. We are going to see if inflation has taken a hit on Tesla in terms of their profit margins. So we'll see. I think we are also going to get some clarity in relation to the new gigafactories abroad. Elon Musk did say they are, and I quote, a cash cow. So hopefully those operations have improved materially. I think we should get more clarity on that tomorrow. So we will be live here 8:30 Eastern Standard Time doing a deep dive on Tesla's earnings. Sabrina Ferris says, Tom, the Tesla and Trump feud was hilarious. Yeah, I saw something like that. I think Donald Trump sent out a tweet saying that Elon Musk was in the Oval Office begging Donald Trump for all these different subsidies and things like that. I'm not sure how true that is, but we'll see. I never knew that Miami had one of those tourist buses. Kind of interesting. Snoopy says a one-bedroom, one-bathroom on Long Island is $2,400. Wow. So Snoopy, what part of Long Island? Savi says, good evening, Tom and everybody. Good to see you, Savi. Welcome. Harrison is here. Good to see you, Harrison. Solo says, outside of New York City and Miami, what is your next city of interest, Tom? Probably Denver, Colorado. You know, I was actually looking at some apartment deals in Denver. Big fan of Denver, Colorado. The only thing is price has gone up so astronomically in Denver that I'm probably going to be priced out of that market for the foreseeable future. But I am very interested in Colorado as a whole. Very interested in Colorado, more specifically Denver as a whole. Big tech town, I think forward-thinking governments there. Favorable tax laws over to New York State. So in a perfect world, and I think I've told everybody this before, I want to have 3 main places of operations where I either have businesses or investment properties, rental properties, more specifically on the multifamily side, in 3 main locations, in order, I should say. Number 1, New York, so more specifically the metropolitan tri-state area. Number 2, Southern Florida, so you could think about Miami, Fort Lauderdale, things like that. And number 3, you know, it's looking like Denver, Colorado. But that is not solidified yet. But yeah, Jones says Denver is nice. I'm a big fan of Denver. Have a lot of friends who have moved from Long Island, New York City to Denver. Yeah, I'm seeing a lot of Wyoming in the chat. Yeah, seeing a lot of Wyoming. So a lot of money managers and things like that tend to migrate to Wyoming as well. Very favorable tax laws there too. But I think Wyoming may be a little bit too desolate for me, maybe. Hey, James says, hey Tom, I'm in Colorado and it's bomb. Very nice. James says Colorado is a lot more than just Denver. Just get a heads up on that, great state. Yeah, so James, I guess I'll ask you, since you live in Colorado, besides Denver, what are like 1 or 2 cities within Colorado that you think would be good for investment properties next to good universities, growing population, new job growth and things like that? So I actually interviewed with a cybersecurity company that is based in Denver. And it was actually one of the biggest investors there is Vista Equity Partners, which we've talked about Vista Equity Partners multiple times on the stream. But they are based in Denver, Colorado. Ping Identity. The ticker symbol is PING. And they actually specialize in a particular type of cybersecurity that's called IAM. So the acronym IAM stands for Identity and Access Management. So if you want to think about some competitors, you could think about like an Okta. So Okta, ticker symbol OKTA. So I think one of Ping Identity's biggest competitors is Okta. Fantastic company, and they are Denver based. Dustin says, ironic you mentioned Denver. Unsure if you're familiar with Rod, but he's having a multifamily event in Denver the end of the month. So I'm not familiar with but I'll have to check it out. I'll take a screenshot. You know, one of my favorite things about Brickell are these buildings right here with all the rainbow colors on them. Yeah, so James says people are buying raw land in southern Colorado too. You know, I think Bill Gates now is the #1 owner of farmland in the United States. Sabrina Fair says, exploration. I work at a financial software company, and I recall a conversation there where I ended up buying a suitcase full of microbrews. War Walker says, I lucked out when I moved downtown. I rent a 1-bedroom with a multi-million-dollar view and paying a little over 1,000 quid, says War Walker. Penelope says, Tom, think hard about Denver. You don't like the cold. Yeah, that's true, but Denver is also a very, very sunny place. And I think, the three main places, if I could be in New York City, Miami, and Denver, I think that'll give me, some diversity of where I am. And also I want to stay around very smart people. So obviously in New York, you have some of the smartest people in the world, obviously, that are attracted to working in New York City. New York City and New York State in general has some of the best colleges and universities on the planet. Most notably Columbia University, you have Cornell University. If you go all the way upstate, you have Syracuse. So I think a lot of people will always be attracted to New York in general because of the universities. And I think Miami is now a bustling environment for startups, very business friendly, a lot of pro-business here in Southern Florida. So, Robert says, what about San Francisco, Tom? I don't think I'll ever move to San Francisco. Right when I graduated college, I was actually going to take a job out in San Francisco, but some of my friends convinced me not to. And I think that was a good decision. I'm so glad I didn't take it because from what I hear, San Francisco is maybe not headed in the right direction. But then again, I should be careful what I say because I've never been to San Francisco. Line Sinks is Boulder, home of famous Boulder, Colorado. Okay. Hey, DowJones.eth is here. What's up, Dow Jones? Good to see you. Doctor Strange says, I like Miami, certain areas, only been there once. Yeah, I mean, Doctor Strange, one of my favorite parts of Miami is a place called Normandy Shores, Normandy Isles. Now, it's funny, back in 2019, this is when, I would say 2018 is when I really started aggressively hunting for my first real estate deal. But at that time, I didn't have a lot of capital. I wasn't as well capitalized as I am now. So I was looking for a property. I looked at Normandy Shores, and it was the first time I've ever been there in my life. And my jaw was on the floor at how beautiful this location was. I'm like, I can't believe how anybody would want to be selling a home in Normandy Shores, Normandy Isles. That's how beautiful the place is. So the house at the time, I think, was about $500,000. It was a little bit out of my price range at the time. I was actually going to use it either to house hack it or as an Airbnb. So long story short, from 2019 to 2021, and you guys could go and fact check me on this as well. I think it'd be interesting to do on the stream. But if you look at Zillow, check out Normandy Isles in Miami. The cheapest house that you can get there now is $1.2 million. Had I just maybe even borrowed money from somebody or tried to raise more funds to do it, because the thing is, I didn't want to purchase a property without putting at least 10% down at that time. I was a little bit new in my career. I was like 3 to 4 years into my tech sales career. I tend to be a little bit more conservative on things, so I didn't really want to take on a lot of leverage. But had I purchased that property, I would have made like $700,000. Would have made about 700 grand in a couple of years, just off of the capital property appreciation there. But hey, that's the business. That's the business. Wow, Wendy England says 1.2 million in Vancouver is a condo, and a small condo at that. Insanity. Two Will Pines says, hey Tom, good to see you. Good to see you, Two Will Pines. Hopefully you're doing well. Happy Tuesday to you. The topic of tonight's stream, Two Will Pines, was Goldman Sachs earnings report. We just wanted to touch on the numbers a little bit. So Goldman Sachs investment bankers took in about $2.14 billion in fees. That is about 41% lower in overall fee income than this same quarter last year. And the main reason for that is because IPO activity is down about 97%. So if we think about the structure of an investment bank and how Goldman Sachs makes money, they make their money off of fee income, right? So if they're advising companies that want to purchase or make an acquisition of another company. They make advisory fees. They make fees off of the M&A business, equity underwriting, when they bring the companies public, IPO. So judging based upon the fact that deal flow is significantly down year over year, I think it's obviously a no-brainer that revenue would probably be down 50%. So even though technically, for those of us who are not super in tune into the market, if you just cracked open CNBC and looked at, the headline of, Goldman Sachs fees are down 41%, you would think we're in the middle of Armageddon, but it's just because the IPO market has since cooled off, because the Federal Reserve has obviously raised interest rates. Credit markets are tightening. If we look at that 10-year U.S. Treasury yield, we are now back above 3%. So investment banks specifically that make all of their money on advisory services, mergers and acquisitions, if deal flow is down, obviously revenue and obviously gross profit is down. But besides that quarter, besides that sort of little factoid in that quarter, if we look at sales and trading revenue, it was actually pretty good, right? If we think about proprietary trading at an investment bank, and proprietary trading is trading the bank's own money to try to make a profit. So Goldman in Q2, even though profit fell to $2.9 billion from about $5.5 billion a year ago, if you look at trading volumes, or trading revenue rose about 32% to $6.5 billion. Now, when the market enters a bear market or increased periods of volatility, why would we think that trading volumes would actually go up? Why would we think that trading volumes would go up and banks would potentially make more money trading when markets go down? Or I shouldn't say markets go down, I should just say increased times of volatility. Well, if you are a trader, by definition, you need volatility to make money. You need movements in the market to make money, right? So if you look at the VIX or the CBOE volatility index, we've been hanging out in the 20s and 30s pretty much all quarter. So as volatility has increased, traders at the investment bank, if they're good at their job, are making a lot of money. Also clients trading, if they're managing money for clients. So that was a bright spot in the earnings report as well, and pretty much same thing across the board at all the major investment banks. James says, I don't think you could buy anything halfway reasonable in San Francisco for under 1.5 million. I'm not too familiar with San Francisco, but here's what I've been hearing overall in relation to San Francisco. A lot of my friends that are in San Francisco has since either sold their places or moved out to surrounding places like San Diego, California. Supposedly, and guys, I'm not an expert in California at all. I'm just telling you what I'm hearing, so this is very much anecdotal data. So it seems like a lot of people are moving outside of San Francisco for a little bit more space in places like San Diego. Maybe a little bit maybe a little bit more affordable there as well. Hey, Two Wheel Pines, thank you so much for the $5 donation. Very kind of you. This is not able to make every live, so happy when I can. Thank you for the great conversation and content, Tom. Two Wheel Pines, very much appreciated. Thank you for the support. And hopefully you are enjoying Brickell or Mary Brickell Village on a Tuesday night. That's where we are right now, so thank you so much. Roy, yes, so Roy, hey, what's up? So Roy, everybody, if you want to know about San Francisco, Roy, I think, does a live stream from San Francisco. So if you really want to know what's going on, feet on the street in San Francisco, I think Roy is probably the best person to advise on that, being that he lives there. So James says, I think I saw that San Francisco has more billionaires than anywhere on earth. I'm not too sure about that. I think that I think that as a country, if we think about countries, I think China, has more billionaires than anybody. Or maybe the United States overtook China, I'm not sure. I think that'd be interesting to find out. Tara Cluck says, does Tom ever show his face? Just curious. Yeah, so we do. I think if you follow me on Twitter, at Walks Wall Street. So if anybody has Twitter, you could follow at Walks Wall Street. You'll be able to see my facial features there. But I mainly just post about all of my equity research and things like that. On Twitter, if you want to connect with us there, at Walks Wall Street. Roy, thank you so much for the $2 donation. Says, thanks, Tom. My channel is Roy Explores. Yeah, everybody, please check it out. Roy Explores if you want some better data on San Francisco, a little bit feet on the street there. So thank you, Roy. The Papa Smurf, hey, FDNY is in the house. Says hello to my awesome friend Tom. Hope you were staying cool in this crazy heat wave around. Tom is a legend. Hey, thank you so much, my friend. Yeah, I mean, we're trying to stay cool. I mean, the good news is, I'm going to be honest, the humidity is insane, right? But at the end of the day, I don't really mind humidity too much. I think maybe as I get older, it may start affecting me a little bit more, but once the sun goes down, it's not too bad here. Once the sun goes down, it's actually really not too bad, to be totally honest. So, but the Papa Smurf, thank you so much, and big shout out to the FDNY. You guys were probably pretty busy yesterday. We were briefly talking about probably about the first 15 minutes of the stream, we were talking about those crazy floods going on in Manhattan. I think you guys had like a mini hurricane/rainstorm that flooded the subways. I was watching a ton of videos on Twitter, believe it or not, about how a lot of the MTA buses were, driving through like 5 feet of flood water in parts of the Bronx. So hopefully everybody is safe. Hopefully nobody was injured during that. Gregory's like, just got to watch those cars. Yeah, I mean, I've noticed something in relation to New York City and Miami. By far, the drivers in Miami are probably the most egregious drivers I've ever seen in my life. They make New York drivers actually look pretty good. Yeah, Arnold's is missing the skateboard. We should have it back pretty soon. I know I've been saying that for a long time, but yeah, photos from around New York says a giant sinkhole opened up. I saw that too. I think that was in the Bronx, wasn't it? Photos from around New York this time last year on the Upper West Side, I was actually walking past a major sinkhole right there, I think on 95th Street and West End Avenue. It was insane. But if anybody's looking for a really, really good restaurant, this place right here, I went out to dinner here with one of my good friends. This place is phenomenal here. Very, very surprised. The place is actually really, really affordable too. So it is an Argentine restaurant, sort of like a steakhouse. This has the Walks in Wall Street seal of approval right here. This is probably one of my favorite places in Brickell, right here. And the inside of the restaurant too looks fantastic. So if you're ever in Brickell, please come to this place. The ABX girl says, yes, the Morris Park section of the Bronx was flooding like crazy. Hey, Bagels and Walks is wishing all of our friends in Europe stay strong and cool. Yeah. So Bagels and Walks, we were just talking about that probably like 30 minutes ago. You're totally right. And we were talking about that in relation to energy prices in general. Right, so if we think about like this is the worst timing for this to happen, because not only are prices of commodities ripping, they've since come down a little bit, but if we think about the price of oil, the price of gasoline, the price of energy, just in general, is so high. I think the vast majority of the reason is self-inflicted, which we were talking about that a little bit before, but I'll digress on that. But Germany in particular, unfortunately, they are now very, very dependent on foreign entities to supply power to their country, which is never good. And much of Europe is going through the worst heat wave they've ever experienced. So hopefully everybody will stay safe and sound through that. Photos from around the NASDAQ, the S&P 500 are now above their 50-day moving averages. So this is some progress, but I think that we need to wait for all of the earnings reports to roll through here. Obviously, financials have capped it off for the beginning of the Q2 earnings season. Obviously, we always start off with the major financials reporting earnings, even though earnings were down significantly. If we think about the reasons why, obviously it's because we are looking at comparables from year over year, and 2021 or Q2 of 2021 was probably the best year in the history of investment banking deal flow in terms of companies going public, mergers and acquisitions. So a lot of the investment banks, a lot of the financial firms were raking it in off the backs of that increased fee income activity and larger than normal deal flow. So even though IPO activity is down about 97% year over year, earnings were pretty much cut in half, but that was expected, right? I think that wasn't a shock to the market. Markets expected that, right? Anybody who follows the market understood that, look, as the Federal Reserve raises interest rates, the cost of capital also goes up. So C-level executives at major companies, people that sit on the board of directors, they are a little bit hesitant. Maybe we won't acquire a company because the cost of capital is going up. Maybe we won't put our company on the market to be sold because maybe we won't get the most favorable valuation. So I think those things are all to be taken into consideration. And I think that's why the markets in general didn't really sell off after those bank earnings reports. I'll give you guys one more view from behind here. I think these three buildings are my favorite buildings in Brickell. Wow, Mark Francis 076 says it's 100 degrees in my neighborhood. Oh my God. That's insane. Tara Cluck says, what was the name of the restaurant again? We'll walk past it. I'm not too good with names, but we'll walk past it. I think it was an Argentine restaurant. But if you guys are enjoying the stream tonight, feel free to leave a like on the video. Also, feel free to subscribe to the channel if you are new here. We go live about 5 days per week between Miami and New York City, walking around and talking about the financial markets and such. James says, which building does Griffin live in, or Ken Griffin? So James, it was interesting. I'm not sure if you were on the stream, but I was in the office today. I pretty much worked, I'd say the majority of the day I worked from the office. And in the Southeast Financial Center, I believe Citadel Securities is setting up a satellite office there. So in some of the empty, I would say like office spaces there in the WeWork building, there was construction workers putting up the Citadel logo on a lot of the doors. And this was in downtown Miami, which was pretty interesting because if we remember correctly, they're actually going to be building their brand new office building not too far away from here. So it looks like that will be their temporary resting place until Ken Griffin at Citadel Securities can get his massive building built. And I think it's a pretty good location because I think Goldman Sachs also has a satellite office there. Obviously, Citadel Securities is one of the largest quantitative firms on Wall Street, very big in the market making space. So here's the restaurant again. my favorite one in Brickell. Hey, Laura89 says, I'm in Scotland and it's 3 a.m. and 18 degrees. Oh my God. Insane. Hey, Gene Lewis is here. Good to see you, Gene. Welcome. E-Baby says, Tom making me plan a trip to Miami. Come one, all, come all, come one, come all, come down. Let me know if you're ever in the area. Love to grab a coffee. Maybe this is a little bit better view, but this is by far my favorite spot, especially if you're going to take a client out to a nice dinner or something like that. I think the inside or the interior of this building is fantastic. The food is great. And it's actually not too bad. You would think because it's in, Mary Brickell Village, it'd be extremely expensive. It's actually not too bad. It's actually not too bad. So aside from Goldman Sachs, we had JP Morgan Chase, we had Morgan Stanley, Citibank, and Bank of America all reporting steep investment banking declines. Right, so I think a lot of that stuff was already priced into the market. But if we want to talk about the exact numbers, the exact reporting numbers, Goldman's Q2 profit fell to $2.9 billion. That is down from $5.5 billion this quarter last year. Revenue fell 23% to $11.9 billion. However, even though things were down quite a bit, they did beat analyst expectations. They did beat analyst expectations, but Goldman was the standout because Citigroup, Morgan Stanley did not beat expectations. Check out this artwork here. Hey, Dante Rose is here. Thanks for the stream, Tom. Good to see you, Dante. Welcome. Hey, Daniel G says, I'd like to see the prices at that restaurant's menu. Daniel, I think you could probably plan to spend about $50 a head if you go in there, to be honest. It's probably going to be about $50 a person. Western Mass Dave says, oh my God, I love the horse. QBiz, it is very lively out tonight for a Tuesday in Miami. Yeah, I think the only thing that I would say, I'm not a big fan of all of the extremely loud car exhaust. Not a big fan. I'm more of a Tesla EV type person, but it's cool to look at all the stuff. Hey, Lady O is here. Lady O is our good moderator from New Jersey. Always a pleasure. Lady O, long time no see. Trust you're well. Yeah, Tara says the prices look reasonable, and I'm a chef in Maryland. Ah, well, Tara, good to see you. Very cool. My friend is also a chef in New York City. My friend just opened up a brand new restaurant. So for all the New Yorkers in the chat, if you want to go out and support a really, really good restaurant, check out Mel's. So M-E-L-S in New York City. Brand new restaurant just opened. It's my friend's place. Go check it out. You will not be disappointed, I promise. Fantastic place. So if you're in New York City, you want to try a unique Italian place. It is mainly a pizza restaurant, but it's not what you think. It's not like your traditional pizza shop. It is very, very unique. Check it out. It is near the Chelsea Markets in Manhattan. It's called Mel's, M-E-L-S. Check it out. You will not be disappointed. Yeah, Bagels and Walks is Mel's, the pizzeria. I've heard good things. Yeah, it's my friend's place. That's my friend's spot, so please check it out. Dustin says, was watching CNBC earlier. Believe the market has bottomed out. Thoughts? Well, I think it's possible. I do think that, so I've been buying the S&P 500 as normal in my retirement accounts. But in my actively managed portfolio, I still have a lot of cash. And the reason why I do is because even though, the market seems to be bottoming out here, which when I say bottoming out, breaking above key moving averages for the first time. If you look at the S&P 500 or the NASDAQ, if you look at the 50-day moving average, we are now trading above that key moving average for the first time in, I think, 6 months. Okay, but if you look at the advanced decliners, so the percentage of stocks that are declining on average and the percentage of stocks that are rising on average, decliners are by far outweighing or outnumbering the stocks that are going up. So there's not really many bases, I should say, that are setting up. I do see some value here in a lot of the enterprise software as a service companies that have really been getting hit hard. One of which is ServiceNow, a couple of them, but just very rigid and jaggedy bases here. But in the next issue of the Behind the Street newsletter, I'm going to be doing a deep dive into industry segments of the S&P that I think are going to be leaders in the next bull cycle. But I think we need to wait for this earnings season to really roll through, right? Obviously, the topic of tonight's stream was Goldman Sachs earnings report, but I think Wall Street money managers in general are really keeping an eye out this earnings season to see just how much inflation is going to eat into gross margins, right? So the theory is, if gross margins are down, if profits are down, and if C-level executives at all of these major publicly traded companies come out and say, hey, we had a really bad quarter, it was so bad we're actually going to revise our earnings estimates down for the entire fiscal year, well, there's a problem there, because that means the forward PE ratio on the S&P also has to come down materially. Okay, so right now, as of today's close, I believe the S&P is trading roughly at about 16 times forward projected earnings. Okay, right at about 16 times forward projected earnings. Historically, that's actually a pretty good place to buy the market. Historically, if you can buy the S&P right around 13 times to 16 times forward earnings, historically that is a good buy if you have like a 5 to 7 year time horizon. But there's only one problem when you look at that. The problem is forward projected earnings are exactly that, they're projections. And if we have this earnings season roll through and we have the vast majority of companies revising down their earnings for the whole fiscal year, well then maybe that's 16 times forward PE ratio is actually 17 to 19. Right? In which case, if you want to get back down to that 16 times earnings on the S&P, that implies right about like a 2,900 to 3,000 on the S&P. But it is possible, if this earnings season comes in strong and surprises everybody, we could see some big volume flowing in here. But as of right now, I really only see value in a couple select few names. But I think the demand destruction from the interest rates going up are going to quite possibly tip us into a recession. The only other variable there where I'm a little bit in conflict is that it's very difficult to go into recession when jobs numbers are screaming hot, right? So right now in the United States, there are more people, there are more jobs than there are actually people looking for work, which is actually really good. It's actually a good sign. We were actually talking about one of the C-level executives at Credit Suisse saying the same thing, that it's extremely difficult to call a recession when the labor market is extremely hot. So Kirby says, why hold cash? Does timing the market work? So in many cases, no. So Kirby, you have a good point. So I personally do two things, right? So I tend to be if anybody has ever heard of Jack Bogle or John Bogle, I tend to really be a big disciple of him. So in my retirement accounts, I take a fixed cost or a fixed amount and just dollar cost average into an index fund or into the S&P 500 consistently every single month. So I take a percentage of my salary in a retirement account. Let's say if it's an IRA or an IRA or something like that, I consistently just buy the market, right, and dollar cost average into my retirement account, which is a tax deferred account, so it grows tax free. But also I have an actively managed account, right, either in an interactive broker's account or something like that, in which case I will actively manage money. And I still think, and this is largely up for debate, but I still think in order for markets to run efficiently, you do need to have actively managed portfolio managers participating in the market, most specifically when it comes to like activist investing and things like that. Because if everybody just took the passive approach, I don't think corporations would ever have any sort of accountability. Right, I don't think that a lot of corporations would be held to account. Right, companies are public for a reason. Right, so maybe if you're an activist investor, if you purchase a very, very large portion of the company in order to get a seat on the board or something like that, now you could actively influence management decisions to help increase profitability, to help increase TAM, total addressable market, and things like that. So I do think that there is room for active investment on Wall Street. I think it's very important for a free and fair market. And I also think it's important for accountability. But it's a good point. Very good point. We are now standing right outside of Bank of America Tower. So when we walk over the bridge, we're going to see a fantastic view of the Aston Martin building. Yeah, Nick's Bank of America building. Here we are right here. Nick, two nights ago on the stream, we were actually walking past the location where Citadel Securities, so Ken Griffin's company that he started from his dorm room at Harvard University, will be moving from Chicago, Illinois down to Miami, Florida, where they will be breaking ground on a brand new multi-million-dollar office building. But in the meantime, it's funny, I was actually working out of the office today at the 200 Southeast Financial Center, and they were actually putting up Citadel Securities logos in the office. So maybe they're just housing some of their employees temporarily in the WeWork buildings until the actual office is built. But it's going to be interesting over the next couple of years as we stream and watch the development of Citadel's new tower down here in Miami. Christina, this is the Aston Martin building, different than Aston Martin residential building. So I think they are residences. I think every single unit in here is residential. I do not think there's any office space. But we'll see it as we walk over the bridge. But if you guys are enjoying tonight's stream, feel free to leave a like on the video and subscribe to the channel if you are new. We are overlooking the beautiful W Hotel, which is also residences too. I think it's called the Icon Brickell. It's one of my favorite places in Miami, just walking around Brickell in downtown. Yeah, Nick is right. So Nick says it's amazing what Brickell has become. Yeah, it's insane. Supposedly just about 5 to 7 years ago, the vast majority of these buildings we're not even under construction yet, so definitely the entire downtown Brickell district here in Miami has changed, bringing a lot of investment a lot of new people moving. That's one of the things that really sparked my move from New York City to Miami, or at least just get a place down here. Because I think if knowing that I am in enterprise tech or enterprise software sales, I think Miami has a pretty big footprint now for, capital creation, big entrepreneurial city, so I think it's a good place to be. So if you look straight ahead, this is the Aston Martin building, but when it is complete, it is going to glow bright white. It's going to be an amazing icon in the Miami skyline. Yeah, QBiz says, I can't believe the Aston Martin building is sold out, $4 million plus for a condo. Yeah, it's crazy. The entire building is sold out, I think. Supposedly on the very, very top, there's going to be a massive pool deck. So there's going to be like an oasis pool on the top. It's going to look amazing. Wow, so we're already coming up on the hour and a half mark. So I'll walk back over to where I'm going to take the bus and then we'll call it a night. But I appreciate you guys joining the stream tonight. The topic was Goldman Sachs. We talked about their Q2 earnings. We talked about how all major U.S. investment banks reported double-digit profit declines, and many of them missed analysts' expectations. Last year's results were hugely juiced by reserve releases. So what does that mean? So if you guys remember correctly, when COVID hit in 2020, a lot of the banks of financial institutions put aside a ton of cash because they thought they were going to see a huge wave of defaults or loan defaults. Thankfully, that didn't happen. So in 2021, what really hit banks' bottom lines were releases from the loan loss program. And now that vast majority of that capital is already back on the balance sheet, on top of investment banking revenue falling off a cliff, we're seeing earnings down. So I think we just have to take that into consideration. Last year was a huge year for investment bankers. If you are watching this and you're an investment banker, which many of you are, EBITDA is in the chat. Good to see you. You probably got record bonuses last year. Record fee income, record profits translates to record compensation. Elizabeth is here. Good to see you, Elizabeth. Hey, Elliott Wave Reviews says, Tom, do you think renting out individual rooms on Airbnb is better than renting your whole apartment? Well, I don't own an apartment. I have it's a single family house, but it's technically now zoned for a legal two-family. So if you run the analysis, it is more lucrative to rent out individual rooms on short-term rental sites like Airbnb and Vrbo, I think like VRBO. It's definitely a lot more lucrative to do that. But, Elliott Wave Review, I'll just give you an idea. So I was looking at the market rents in my neighborhood. So if you want to rent a 3-bedroom, 2-bathroom home in my neighborhood, you're probably going to pay anywhere from $3,500 to $4,000, which is just crazy if you think about it like that. So think about that. A 3-bedroom, 2-bathroom home, many of them here are renting for about $3,500 to $4,000. If you rent out the individual rooms on Airbnb, you could probably get over $100 a night. So, I mean, if you just do the math on that, if you have, 3 bedrooms, you're putting them on Airbnb and you're really hammering on it. Let's say if your payment with the taxes, the insurance, the mortgage, maybe we'll go the other way. I think there's construction here. You're probably going to be cash flowing a couple $1,000s over, which is insane. But then again, that takes into consideration that we think that these rents are going to stay high forever. So usually when I structure deals, right, and I only have one deal, I've only done one deal, but I usually take into account a 30% buffer, right? And the reason why I do that is because you have to be realistic. You know, anything can happen. Nobody knows where the market's going to go. Nobody knows if rents are going to go up, down, sideways. So when you're structuring your deal, and if you're trying to figure out if the property is going to cash flow, I would run the numbers based upon a 30% haircut on the amount of rent that you think you could get. And if the property still works based on those numbers, I mean, the deal is like a freaking screaming hot deal. And you should pull the trigger and you should get that deal. Because what you don't want to happen is a situation where you model the deal on top tick price rents, and now rents are coming down, and now you're at a loss and the property is negative cash flow. So I think it's better to be safe than sorry, I think. In general, I think is better. QBiz Manhattan hit an all-time high with $5K monthly rent. Yeah, you're right. We were talking about that a couple minutes ago. You know, I think in places like Manhattan, I think if we analyze the data based on average rent, I don't really think that gives an honest, conclusive picture, because, you know, you could live in East Harlem, you could live in Hamilton Heights, Washington Heights, and then you're still averaging in those rents of people who are living on Billionaires Row paying 80 grand a month. So I think in a place like Manhattan, I think those type of stories make for a really nice headline, but I don't think it really tells the big picture. But you're right, QBiz. I mean, the rent is insane. I think we are entering an affordability crisis, and I think that may be bullish for multifamily. I mean, if people are going to continue to be priced out of the single family housing market, you know, they're going to have to rent somewhere. So yeah, James, is being able to walk to Central Park without taking the train is such a luxury. You're right. Yeah, drops is everybody wants to live in Manhattan. That's why. You're right. You know, although over the past couple of years, there are some places in Brooklyn where it's actually more expensive to live in some places of Brooklyn, like Williamsburg, Dumbo, to be specific. It's actually more expensive to live there than Manhattan. Some parts of Manhattan, which is crazy. But hey, Rob DeCaro is here. Says hello from Ohio. Good to see you, Rob. All right, everybody, we are coming up to the end of the stream. It was a fun one. I appreciate it. Thanks, everybody, for coming out. Tomorrow is a very, very important stream, okay? Because tomorrow we will have an exclusive topic talking about Tesla's earnings report. That is right. Tesla will report earnings tomorrow, Wednesday, after the bell. So we will be doing a deep dive into that earnings report. So please join us tomorrow, 8:30 Eastern Standard Time. And we will talk about Tesla, Elon Musk. So I think it'll be appropriate to end the stream right here as we are passing this Tesla. If you guys enjoyed the stream today, please feel free to leave a like on the video. Subscribe to the channel if you are new. Hit the subscribe button because we do go live about 5 days a week between New York City and Miami. So thank you so much for joining, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. And I'll see everybody right back here, 8:30 p.m. Eastern Standard Time. So Maurice, thank you so much. Roy, appreciate it. Western Mass Dave, out and about. EBITDA, E-Baby, Dr. Longest, Ryan, Royal, Wendy, England, Jason, Bob, Michelle, Henry, For You, Al J, Photos from Around New York, The Mighty Bull, Dow Jones, ETH, and EBITDA. We'll see you tomorrow.